Hi and Assalamualaikum everyone. Today me and my partner Akif are going to give a talk about assertions. So what is assertion? Assertion is not really a word that we use in our daily conversation with our friends or our family. Even I rarely heard anyone ever use the word assertions. So what is assertion? According to the dictionary, assertion is the statements that we think are true. I can make a lot of assertion right now. For example, I can say that my cats are the cutest cats in the world. And how do we actually measure that cuteness? Similarly to the financial statements, how do I measure whether there is no material misstatement in those financial statements? How do I measure whether all those figures are true or not? The idea of assertion is figures in a financial statement is not a figures that say one thing, it's a figures that say many other things. So I have to get enough evidence to state that those figures are indeed true. Financial statement assertion is really important because nearly every financial metric used to evaluate company stock is based on the financial statements. So there are many use of financial statement assertions such as completeness, existence, right and obligation, and so on. But today we are just going to talk about rights and obligations. Explain to you all about rights and obligation assertions. So I'm just gonna give it to Akif right now.
Hello and Assalamualaikum. My name is Akif Izzuddin bin Azman. So my ID card is 622132202447. So I will basically talk about the assertion, the right and obligation. So the assertion of the right and obligation is basically the assertion that all the asset and liability includes in a final statement belongs to the company issuing the statements. So the right and obligation assertion state that the company owns and has the ownership rights and the or uses the rights or the recognized assets. So basically for the liabilities, is an assertion that all liabilities listed on the financial statement belongs to the company but not the third party. So for the entity has the right to ownership or use the recognized assets, and the liability is recognized in financial statement represent the obligation of the entity. For example, the audit entity owns or control the inventory recognized in the financial statements. So any inventory held by the audit entity on accounts on the other entity has not been recognized as a part of inventory of the audit entity. That's all.
Okay, thank you Akif for the explanation. So I'm just gonna give a few examples on right and obligation assertions. So let's say I'm gonna audit this one company, right? And the company stated that they have over 20 million in asset for buildings. So I, as an auditor, I have to gather the evidence whether the buildings is really exist or the company has every right over the buildings. So if the companies can provide the enough evidence that they have the right for the buildings, so I'm just gonna give my opinion on the financial statements. So let's take a real life example of right and obligations. I'm going to take Z-Best company, since Z-Best case is really famous. It's been used up until now for the accounting case study, right?
At 22, he'd been convicted of 57 counts of fraud and was off to federal prison.
Z-Best company had begun in 1982 as a door-to-door carpet cleaner. So in 1984 to the 1987s, the company revenue has risen up from $200,000 up to more than $2 million. And the company went public in 1986. And in the spring of 1987, the company market value has risen up over $200 million. It's really impressive. But in July 1987, the company fraud has been revealed and the asset were actually valued at only $62,000. So the masterminds in this case is Barry Winco. Barry Winco has been convicted with 52 securities fraud. I'm not going to go into details with this case, so I'm just going to relate it with the right and obligation assertions. So the first auditor is Josh Greenspan. Josh Greenspan's claim that he have full audit the company Z-Best company, but he never actually visit the restoration site, which is actually something that he have to do, but he didn't. But if he did it, he actually can save a lot of people a lot of money. So he actually didn't do it. So the second auditor for Z-Best company are Ernst and Winnie. Ernst and Winnie require Barry Winco to actually show them the restoration sites. So what Barry Winco did was, he made a top 2 floors of a building looks like a restoration site, and he even hired few people to lie about it, to say that, oh, it always been there and so on to the auditors. This is probably the most extensive part of the fraud, and he even make a confidential agreement with the auditors that the auditors should never contact the people that have been there at that time and should never revisit the sites. So this sends up a huge red flags, and as an auditor we should have a professional skepticism, like why don't he let us to revisit the site and so on. There must be something wrong with it. So this is the perfect example. Barry Winco create a lie about his assets that he has no right against it. So this is the perfect example for me for obligation, a real life case example. And thank you. I will let Akif to give you guys a conclusion about our talk today. Thank you so much.
So I will talk about the conclusion. So in the conclusion, the assertion are an important aspect of auditing, since the financial statement cannot be held to a lie detector test to determine whether they are factually or not. So the other methods must be used to establish the truth of the financial statements. So the assertion are defined as statements that is believed to be true by the speakers. So an assertion can be anything, such as a asset that fundamental value in investing in the best investing philosophy. So however, it is very difficult to measure whether the statement is indeed true. Similarly, with the final statements, it is very difficult to determine what financial information is free from the material misstatements. So there are two aspects that two material misstatements. Clearly, materiality plays a large role. However, how to measure what information is true or an affair or mistake is crucially important. So assertion plays a very key roles, a big key roles in determines whether it's true and affair when the auditing financials records. I think that's all for me. Thank you.